It is not going to move the needle on the stock market, but the introduction of the Model 3 Performance today would be the car I would buy were I in the market for a new car. Even at my advanced age, this would be the absolute, I wouldn't even hesitate. It would be an easy decision. Let's see. Here's the specs: 0 to 60 miles per hour in 2.9 seconds, 510 horsepower, 741 Nm, 163 miles per hour top speed, performance tuned chassis, some quiet and comfortable cabin, plus bespoke chassis hardware for improved stiffness and higher performance baseline, more power, lower energy consumption, and the new performance fourth generation drive unit can deliver 22% continuous power, 32% peak power, 16% peak torque compared to previous Model 3 performance, all with lower total energy consumption. Those are all improvements. So 22% more continuous power. That's what it meant. I see. 32% more peak power and 16% more peak torque. I get it now. Forged and staggered 20-inch wheels and Pirelli P04 tires, better traction out of corners while limiting traction control interventions. Also better comfort, lower rolling resistance, and increased range. Better track mode. Track mode V3 now integrates motor controls, suspension controls, powertrain cooling, and our vehicle dynamics controller under one single unified system. This gives you more predictable, stable, and consistent experience in various track environments, which is what I would be doing. I'm kidding. New adaptive dampening system adjusts to driver and road inputs in real time, optimizing the ride and the handling while also improving ride comfort. Controlled via in-house software, which means it keeps improving via future, of course, over-the-air updates. Does anybody else have over-the-air updates yet? More aerodynamic exterior design, and nobody talks about it. Nobody even thinks about it anymore. It's just such an obvious thing, and yet I think Tesla is still the only one that does massive, continuous improvements in your car after you buy it. More aerodynamic exterior design, 5% reduced drag, 36% lift reduction, 55% improvement in front to rear lift balance compared to the previous Model 3. New sports seats, same functionality and comfort as before, but with much better lateral support for cornering and dynamic driving. Any other car with these specs would cost at least double this amount. Model 3 Performance is the most affordable sports car you can buy. Daily driver, ultra low maintenance partner, and dopamine machine all in one. All right, this comes from TC Mesta. It says, Tao Lin, VP of Tesla China, confirmed on China social media that all four rear seats in the six-seater Model XL can be folded completely flat. This is a significant change compared to the six-seater Model X. Okay, so this is a lot of people have been asking for this. I'm assuming that the US model will have this as well. So the whole thing folds flat, even on the six-seater. Mario Knopfel says Tesla secures are you ready? $2.7 billion MegaPack deal with Georgia Power. Tesla has secured a major $2.7 billion order from Georgia Power for 3,022 megawatts of MegaPack battery storage. The deal includes 10 large-scale battery and energy storage facilities spread across 8 counties in Georgia. All projects will use Tesla's 4-hour duration MegaPack units and could power over 2 million homes for 4 hours. Pending final approval, the systems are expected to come online between 2028 and 2030 to meet growing energy demand. So Georgia is going crazy. I don't know what's happened with Georgia, that they are all about the modern power facilities, primarily using solar and batteries, but also nuclear. So Georgia is trying to do a Texas there. All right, this is from The Guardian. I don't normally quote The Guardian, but sometimes you got to do what you got to do. China is urging its electric vehicle industries to stop cutting prices and to rein in production amid fears that persistent deflation is imperiling economic growth. In recent months, Chinese officials have talked repeatedly of the needs to compact involution, which I've never heard of before, never heard the word, in sectors suffering from overcapacity, such as EVs. Xi Jinping has spoken of the problem directly in an unusually blunt speech this month. China's president criticized provincial governments for blindly overinvesting in artificial intelligence, in compute power, and in new energy vehicles, industries that Beijing has identified as strategic priorities, but which are also at risk of overheating. On July 23, Xi gave another speech in which he stressed the importance of breaking the cycle of involution that is gripping parts of the Chinese economy. So this is, he's serious about this. Some of China's big car companies, including BYD, were summoned to meetings, specifically summoned to meetings with regulators last month to receive warnings about overcapacity. Hutong Research, an independent advisory firm based in Beijing and Shanghai, said in a recent note, government agencies across China have moved swiftly in response to Xi's remark, pledging to implement supply-side reductions. These developments highlight not only the elevated political attention to excess capacity, but also the breadth of the problem across Chinese economy. In the hyper-competitive Chinese economy, consumers unwilling to part with their cash have come to expect rock-bottom prices. Companies across industries often cut prices to near or below cost levels in a play for market dominance. So the Chinese capitalist system is on fire, and Xi is saying, wait a minute here, this is not good. China's EV companies are no exception, and many bosses have complained about the phenomena while also being dragged into it. BYD has repeatedly cut prices of its low-end Seagull, most recently offering it for 55,800 yen, which is about 5,800 pounds. 5,800 pounds. It's supposed to sell for 10,000. Great Wall Motors, one of BYD's competitors, released a new version of its Aura 3 car in June for about 20% less from its September retail price. In January, Xpeng, the chief executive of chief executive of Xpeng Motors, reportedly told employees that market will definitely see fiercer competition in 2025, and some auto companies would not survive the looming price war. Okay. Last month, China revealed a new draft amendment for its law on pricing, where they may be forcing the subject. So, very interesting, worthwhile to know about. Now, I also sometimes quote the street. I'm not a big fan of the street. It's usually not very good. It's usually not very current, and it's usually wrong. But other than that, I thought this was worth, again, at least looking at. Last month, Elon Musk got his new milestone. He became the first person in modern history to be worth $400 billion. That was after SpaceX was valued at $350 billion, which has got a $20 billion amount in his jump in his net worth. But the truth is, Musk's financials have taken a hit in 2025 because of Tesla stock being down. While Musk is barely scraping by, he's only worth $352 at the last look. On August 3rd, the board approved a stock award. Of course, we know about this, $23.7 billion. According to the Tesla corporate filing, Musk need only remain in continuous service. We know all about that. But the basis of the story is Musk picked the right horse when he used at least $250 million of his own money to help get Donald Trump reelected. That was a good idea. Trump's win pushed Tesla stock price and Musk's fortune to new highs. But since then, Tesla's brand loyalty peaked last year in June of 2024. Here's the point of the story. It peaked last June. But since then, 73% of Tesla-owned households looking to buy a new car purchased another Tesla. This represented a significant brand devotion. This is the continuation. So it was really good up through then. Then after he picked the right horse, the numbers went down. More recent data, which tracks registration data across all 50 states, show that Tesla's loyalty bottomed in March. 49.9% of Tesla owners looking for another. Now it ticked back up to 57.4 in May. So don't know why that would improve so much. These numbers are bouncing around like the employment numbers. Tesla's brand loyalty is no longer a differentiator from other companies. S&P analyst Tom Libby told Reuters that Tesla's decline from the unquestioned industry brand loyalty leader to industry average was unprecedented. I've never seen anything like this rapid decline. For the 4 years before July, Tesla acquired on average 5 new households for everyone it lost, well ahead of any rivals. The next closest competitor was Hyundai. But since February, Tesla has only gained fewer than 2 households for everyone it lost to a competitor. So if all that is true, and again, we're talking about surveys, which has certainly been a big subject this week, that's not good. All right. This is Randy Kirk, by the way. You know what to do. Like, subscribe, and notify. Later today, regular programming, as far as I know, we'll have Nicholas Gibbs, and that's followed by Brian White. All right. The U.S. trade deficit narrowed in June. The U.S. trade deficit narrowed in June on a sharp drop in consumer goods imports. The latest evidence of the imprint on global commerce President Donald Trump is making. The overall trade gap narrowed 16% in June to $60.2 billion, which was versus 61 expected, days after reporting that the goods trade deficit. Apparently a few days ago, they announced that the goods trade deficit tumbled 10.8%. This is the overall, which includes services, which tumbled as well. All right. Then we've got the U.S. Sector PMI indices. Now we've got 2 of these, and they come out at the same time, usually on the same day. So we've got, first of all, the S&P. So the S&P says, covering over 1,000 private sector companies, July data indicated an upturn in business activity across 5 out of 7 monitored U.S. sectors, up from 4 in the previous month. They had reduced output in basic materials and healthcare segments, being the only 2 exceptions. Activity levels in the technology sector expanded at the fastest pace since June of 2021. Technology has been the best performing category in 3 of the last 5 months, but financials were also up big time in July. Business activity in the financial segment increased at a robust and accelerating pace, with momentum at the strongest since December of 2024. Industries also expanded at a relatively strong rate in July, which marked 18 months of sustained growth. Moreover, the latest rise in business activity across the industry sector was the sharpest since May of 2022. That's all pretty good news. Marginal rates of output growth were seen in both the consumer goods and consumer services sector in July, with the former posting its weakest upturn. So the former, the consumer goods section, having the weakest upturn in the current 4-month sequence. Growth of business activity in the consumer service sector was weaker on average in the first half of 2025, with healthcare registering another slight reduction in business activity. People are getting healthier, spending less. What's going on? Finally, production volumes in the basic materials segment decreased for the 5th month running. So basic materials is the soft spot. Now, that was the S&P Services Survey from what do you call it? From the purchasing managers. All right. Now, this is the ISM Services Survey. Economic activity in the service sector grew in July for the 2nd consecutive month, according to the poll report on business. The Services PMI indicated expansion at 50.1%, which is above the break even for the 12th time in the last 13 months. The report was issued by Steve Miller, blah, blah, blah. Registers 50.1%, 0.7 percentage points lower than the June figure at 50.8, but in expansion territory. But it was also lower than the expected of 51. The business's activity index remained in expansion in July. The index has not been in contraction since May of 2020. The new orders index also remained in expansion territory. The employment index was in contraction territory for the 2nd month in a row, and the 4th time in the last 5 months. The reading of 46.4 is 8.8 percentage points lower than recorded in June. The supplier deliveries index registered 51%. This is the 6th consecutive month that was in expansion territory. The prices index was higher. It registered 69.9% in July, a 2.4 percentage point increase. The index has exceeded 60% for 8 straight months, even though we're seeing nothing in the purchasing, in the actual stats on what do you call it, the PPI. The Services PMI has expanded in 58 in the last 62 months. Miller continues. July's PMI level continues to reflect slow growth, and survey response indicated that seasonal and weather factors had negative impacts on business. The employment index continued contraction and faster The employment indexes continued contraction, and the faster expansion in prices index are worrisome developments. The new exports, a 3.2% decrease in July, and imports, a 5.8% drop, which both move from expansion to contraction, provided signals that tariff tensions are impacting global trade. However, continued expansion in the business activity and new orders indices, together with a slight improvement in the backlog of orders, highlight the resilience of the U.S. services sector, which is over 60% of all business. Some respondents noted increased transportation congestion that supported the slower supplier deliveries index reading, another sign the activity levels are expanding. The most common topic among survey panelists remain tariff-related impacts, with a notable increase in commodities listed as up in price. Well, that would be, we are expecting some increase in price, no doubt about that. But anyway, that was reported as being bad news. Those two indices together was reported as being bad news by CNBC. To me, you heard it. Now that was, I read you guys the raw data. I do a little analysis, of course, as I'm reading it, but that's the raw data. And then CNBC takes that and calls this not good. I don't understand that. It sounded pretty good to me. Rasmussen poll this morning says, he says, look, how important, this is a little extra. I'm throwing this in because I couldn't believe it. How important is it to prevent illegal immigrants from voting in U.S. elections? How important is it to you? Would you call it really, really important to keep illegal immigrants from voting in U.S. elections? I would. So for Democrats, it's only important to 61% of Democrats. Independents, it's only important to 72%. And almost shockingly, to GOPs, it's only important to 88%. I'm sorry, that's 86%. I would think the GOP would be 99.9. Anyway, but Democrats, barely over half care whether illegal immigrants vote in our elections. I don't know what to say about that, but I had to throw it in. Trump this morning is at 48%. The TRU is up a little bit at that's Truflation. Truflation is up a little bit at 1.75 compared to 1.67 yesterday. And but the year-over-year number dropped all the way down to 2.05. We are so close to 2% on the year-over-year. Let's see if I can get it real quick for you. I've been trying to do this every day, and the number wasn't out yet when I checked a minute ago, but it might be out now. Let me see. I want to keep doing this GDP now every morning if I can. No, they're still not showing it. It's supposed to be out today, but maybe it comes out later. See, I'm not used to doing that one. All right, let's look at the rest of the numbers here. Let's go ahead and look where Tesla is. Down just a bit. It was up. It's been down. It's been all around. The markets in general are down. So Tesla is down 0.63%. The Dow is down 0.42. NASDAQ is down 0.30. And the S&P is down 0.45. And all of those were up and then down, and Tesla is kind of following that trend this morning. You got the Magnificent Seven split exact, the rest of the other Magnificent Six split exactly 50-50 with 3 showing green, 3 showing red. Oh, the VIX is at, whoops, I missed it here. What happened? I missed it. The VIX is gone up again pretty sharply to 18.3. Don't know why it's jumping up so much. I didn't see anything at all in anything that is out there that would cause the VIX to go up. And you got the Cathie Woods all down, but not sharply, just down, and had been up and going down. So maybe there was some news breaking that I didn't catch. Maybe it was that ISM index, and maybe it wasn't the real index. Maybe it was the reporting on the index. Who knows? But things are kind of trending down right now. Let's take a look. We'll see if there's any headline coming across on CNBC. No headline. Trump, of course, is talking about tariffs, and he's talking about pharmaceutical tariffs, but I don't think that's the reason for things to be down right now. And bonds have moved into the downward trend again. We're at 4.19, down 0.8 of a basis point. That should be good news for the Cathie Woods, but it's not showing up. Oil down 79 cents. That should be good news for everybody, continuing now down to $65.51. Natural gas bouncing back up a little bit. By the way, I did do my homework on that. Natural gas, so $2.99 is low for the last like 6 months to a year, but a year ago this time it was lower than that. So it can go lower. All right. It could go down, quite a bit lower than $3. Okay. And we've got gold up $10 at 3,436. That is up 0.29%. Silver up 1.39%. Moving back up towards this all-time high, 37.87, and copper down a little, 0.94 at 4.39. That's the opposite of what my expectations are. The dollar is split, mixed, one up, one down. The yen up, and I don't know which one. Anyway. Bitcoin up. I'm sorry, down. Bitcoin down 2,159, 112,670, and that is all of the. So Tesla sold a record 7,000 cars in South Korea. I think they sold more cars in South Korea than they did in most of Europe last month. South Korea is doing really, really well. All right, let's see. Tonight, as I mentioned, Nicholas Gibbs on at usually almost exactly like 5:20. And that will be followed by Brian White at roughly 7:45. Last night, Brian White and I had a great fun time. I would highly recommend it. It was very hilarious. I'll put that card right up here. What else have I got to tell you? I think that's all I got to tell you right now. So let me get out while the getting's good. And as always, it's been great talking to you.